Over the last few years, the housing market has felt like it was swinging between extremes. Record low rates, bidding wars, and then suddenly affordability pressure, higher rates, and hesitation. But as we head toward 2026, something important is happening. This is not shaping up to be a boom year. It's not shaping up to be a bust year either. Most economists, housing analysts, and market forecasters are calling 2026 something very different. A reset. A return to slower price growth, more inventory, and mortgage rates settling into a new, more predictable range. That reset looks different nationally across Texas and especially here in North Texas. And today, we're breaking it all down. Welcome to Jesse's weekly DFW real estate update. I'm Jesse Showalter. Let's get into it. Before we get into the broader 2026 outlook, let's start with mortgage rates because they still set the tone for everything else in the housing market. According to Mortgage News Daily on Friday, December 19th, when this video is recorded, the average 30-year fixed mortgage rate is at 6.22%. That's down about 5 basis points from earlier this week and 10 basis points from last week's update. The 15-year fixed sits around 5.74%, with FHA and VA loans just under 5.9%. The key takeaway here isn't just the weekly dip, it's the broader pattern. Mortgage rates continue to move in a choppy but gradually improving range. We're seeing small steps lower, brief pullbacks, and then stabilization, which is exactly what you expect as the market digests inflation data, job reports, and Treasury activity. Zooming out, this fits well with what most major forecasters are saying about 2026. Mortgage rates are no longer expected to swing wildly. Instead, the consensus outlook puts them settling into a more predictable band, generally in the low to mid 6% range. That predictability matters. It allows buyers to plan, sellers to price more confidently, and builders to move forward without guessing where rates might be next month. And with that foundation in place, let's get into one of our new segments, our insurance update. One cost that doesn't get enough attention in housing conversations is insurance. And heading into 2026, it's becoming a much bigger piece of the affordability puzzle. That's why I wanted to introduce a new segment to the show. I'm joined by my good friend, insurance expert, and barbecue aficionado, Nick Klein, Vice President at the High Agency, to talk about what homeowners and buyers need to know heading into 2026.
Hey, this is Nick Klein with HI Agency. We're a full service brokerage and an independent agent with over 30 carriers for home, 20 for auto, and we have over 50 for commercial and life insurance. So when it comes to insurance, we can get you taken care of. I got a market update and it's good news. So for the first time in about 18 months, markets are open. That's something I have not been able to say because it was a pretty hard market the past almost 2 years, but insurance is open. Companies want business here in North Texas, which is great news. And what that means is with competition, that prices are leveling off and in some cases going down. But there's still some important things for buyers and just people in general to understand. And that is that there's very different coverages and deductibles than what we saw 2 years ago. With companies looking to get profitable in the insurance industry, that meant that they changed some things, and it's something that you need to be aware of. So reviewing your policy is huge, and we here at HI are happy to do that whether you're a client or not. But making sure that you know the coverages that you have, especially leading up to hail season, which is only a couple months away. So things like knowing whether you have replacement costs on your roof, knowing your percentage deductible and how much that is. Those kind of things are huge, and there's still time potentially to change that prior to having a loss. So if you have questions, we'd love to help you out. Know that even with markets opening up more, carriers wanting business, insurance underwriters can still be very strict. So if you want to make sure that you have the inspection done, especially on a purchase, And if there's claims on the house, knowing exactly what they were and how they were repaired or replaced. So especially when you're in the option period, if you have questions, we're happy to go over that with you to make sure, even if you stick with your current carrier or your agent that you've had for forever, we can still give you some advice to make sure that you know what you're going into whenever you purchase a home. Because insurance is obviously pivotal. It's pivotal to close, especially if you have a mortgage, and it's smart to have in general. So just know we're here to help. Have a great day. See you soon.
Thank you, Nick. I really appreciate the insight. Before we move on, if you have questions about your current coverage, rising premiums, or what insurance will actually look like on a future home purchase, Nick and his team are a great resource. You can reach Nick directly at nick@hiagency.com, and I'll also include that contact information below. Insurance is no longer a background cost. It's a core part of the monthly payment conversation. Now, let's zoom out and look at the bigger picture. Nationally, the consensus heading into 2026 is surprisingly aligned. Most major forecasting groups, Zillow, Redfin, Realtor.com, National Association of Realtors, all say the same thing, but in different ways. The housing market is normalizing. Mortgage rates are expected to hover in the low to mid 6% range. I would love to see a 5 in front of that. That would be great. Home prices are forecast to rise, but slowly, generally 1% to 4% nationally. And sales activity is expected to improve modestly as pent-up demand begins to release. Now, you may hear one number that sounds much bigger. A 14% sales increase projection from NAR leadership, but that's best understood as a best case scenario, not the baseline. Most other forecasts point to low single-digit growth unless rates fall faster than expected. Inventory is the quiet story here. National housing inventory is projected to improve by roughly 9%, pushing the market closer to balance and easing affordability pressure slightly. The key takeaway at the national level is this: 2026 isn't about acceleration. It's about regaining footing. Zooming into Texas, the story stays consistent, but with some important nuance. The Texas Real Estate Research Center projects statewide home sales to grow around 2% in 2026, with total single-family sales landing near 340,000 units. Home prices are expected to rise modestly as well, roughly 1 to 3% statewide, putting the Texas median price near $350,000. Construction remains active but more selective. Single-family permits are forecast to rise about 4%, while multifamily construction cools sharply after a heavy delivery cycle. Here's the key Texas reality. Even as mortgage rates ease, property taxes and insurance costs remain real constraints. Texas is no longer the ultra-cheap housing market it was pre-pandemic, and it's unlikely to return to that era. Affordability may improve, but only modestly, not dramatically. Now, let's bring this home to North Texas. Despite national headlines that sometimes suggest otherwise, the consensus for DFW heading into 2026 is clear. No crash, no collapse, no major correction. Most forecasts call for a 1.8 to 4% price growth across the Metroplex, depending, of course, on location and price point. That's normalization, not weakness. What continues to support DFW is the same trio we talk about every week: population growth, job growth, and corporate relocations. North Texas continues to add more than 100,000 residents per year, and the region's diverse economy, tech, finance, healthcare, manufacturing, logistics keeps demand broad-based. Inventory has improved meaningfully compared to the pandemic years. Many areas are now sitting around 3 to 4 months of supply, which is considered a balanced market. And here's where selectivity matters. Homes that are priced correctly, updated, and located near strong schools, jobs, and amenities are still moving. Homes that miss the mark on price or condition are sitting longer and seeing price adjustments. That dynamic isn't a sign of weakness, it's a sign of a healthier market. As we look ahead to 2026, the most important shift isn't about rates, price or inventory on their own. It's about balance. After several years of one-sided conditions, first heavily favoring sellers, then swinging sharply towards buyers, the housing market is beginning to settle into something we haven't seen in a while. A more two-sided market. Buyers are gaining leverage again. They have more options, more inventory to choose from, and more time to make decisions. The pressure to rush into a home without fully understanding the numbers is easing. At the same time, sellers are not losing demand, but the rules have changed. Homes that are priced correctly, well presented, and aligned with current market conditions are still selling. Homes that ignore where the market is today are sitting longer and adjusting. That balance is healthy. It's what a normal market looks like. It's what allows buyers and sellers to meet in the middle rather than one side dictating the terms to the other. And that balance is what defines this next chapter. 2026 isn't a buyer's market. It isn't a seller's market. It's a balanced one. And that's it for 2025. If you're thinking about buying, selling, or investing in real estate as we head into the new year, this is the kind of market where having a clear plan matters more than chasing headlines. If you want help understanding what these trends mean for you here in North Texas, I'm always happy to be a resource. No pressure, just real clarity. That is Jesse's weekly DFW real estate update for the week of December 22nd. And this will be my final update of the year. I'll be taking a short break for the holidays, and I'll see you back here with the next update on Monday, January 5th. As we wrap up the year, I just want to say thank you, whether you've been watching every week, checking in occasionally, or just found the show. I truly appreciate you being here. I hope you're able to slow down, spend time with the people who matter most, and enjoy the holiday season. From my family to yours, have a safe, peaceful, and joyful holiday, and I'll see you in the new year.